Hey everybody, Josh Sigurdson, World Alternative Media here, and of course I'm joined by John Sneisen, author of the book The End of Freedom, How Our Monetary System Enslaves Us, which you could find on Amazon. So today we're going to be talking about bail-ins. Bail-ins, it's not exactly the same thing as bailouts. They're actually less politically unpopular, but they're very important to have an understanding of if we're looking at the foreseeable future when we see businesses going under. And I mean, this affects creditors a lot. Now, I wanted to kind of open it with what I know about bail-ins, because honestly, I don't know that much about it. I'm about to learn a lot more from John here. So with bail-ins, creditors must agree to forego their short-term claims and or agree to a restructuring that reduces their holdings, which pushes other potential creditors away and makes them feel less secure with the corporation. It can further reduce business and productivity, and that's obviously a huge risk factor. Now, it can also lead to higher interest rates, and we don't really need that in today's economic climate when it comes to businesses. And it began as a public policy tool with Cyprus, which forced creditors and some depositors to forfeit some of their holdings in order to keep banks alive. These strategies have been used in the airline industry through bankruptcy proceedings or worse. So, John, can you tell us a bit more about bail-ins? Because that's all I really know about it, and I'd love to be educated here.
Well, you touched upon bail-ins and the actual airline industry. What it is, it's just what's called they take the bondholders' money and then help the company by not going bankrupt, basically. Mm-hmm. So they're taking investors' money and then saying, like, well, sorry, you gotta have to lose some of your money, and then they take it and push it into the company to keep it alive. In the banking system, though, this started in Cyprus in 2013, where the IMF has been a proponent of this with Ms. Lagarde, that's the head of the IMF. Yeah. And they've been talking about putting out bail-in strategy for a while, but Cyprus was actually the first place in the world that implemented a bail-in, where two of the banks, it was Larnaca Bank and I think it was Cyprus Bank, the two major banks in Cyprus that went bust, because they were betting with derivatives on a debt default in Greece that got bailed out. So what happened is, they didn't default, but they did. Yeah. And then the banks were on the hook for a whole bunch of money. Mm-hmm. So what happened is they shut down the banks. People couldn't get their money out of the banks. And then over a little bit of time, there was a lot of discussion. It took, I think, over a month or two. They ended up taking 6.75% of the money from people that had bank accounts under the $100,000, and then they took 9.99% of people that had it above $100,000. Okay. So they used that to keep their banks alive, and then it was basically a tax. I would call it a tax, of course. Which they took a whole bunch of people's money that they thought was safe. When you put your money in the bank, your bank money is not safe at all. It's actually, you lend it to the bank, and it's not yours until you take it back out again. Yeah. So that's the number one rule. The banking system. Never believe that the money in your savings account or in your checking account is yours. That's
not guaranteed.
No, it's not guaranteed. They do have here in Canada, we have the CDIC, the Credit Deposit Insurance Corporation. Yeah. Problem is, though, I looked at the numbers, and they only have 0.79% of that money covered that is under the $100,000.
Wow. Well, okay, most importantly, and I wanted to ask, how does this affect the markets?
How it affects the markets is, there's going to be more risk taken because the banks know that they can do whatever they want. Actually, I wanted to touch upon this, which doesn't really have too much to do with bail-ins, but it's called a zero reserve policy. You talked about fractional reserve banking a couple of times, but the zero reserve policy means that the banks can take care of how much they think is appropriate to keep on their reserves. And that's what Canada and several other countries like UK and Sweden has. The banks are not obligated to keep an excessive reserve anymore that they have in a fractional reserve bank. So basically they could have zero reserves, and they would still be entrusted that. Let's go and talk about Canadian system and what they did in 2013 in Canada. Canada was actually the first country in the world after Cyprus got the bail-in to implement the bail-in strategy for their too big to fail banks. And you're going to post a little document that people is actually going to see, and post a link to the document itself. If people don't believe us, you just go on page 144 in this document, and it says, like, if the too big to fail banks fail, we'll use a bail-in regime.
Wow.
So, and nobody really understands or know about this, and think that, like, we're in Canada, we can never see anything like this.
Yeah.
Well, it's happening all over the world. After the G20 meeting, and I think, I don't know if it was Australia or where it was, they implemented this bail-in strategy in all G20 countries under the radar. Like the EU has it now. There's documentation now. I'll make sure that you get links to the EU documents that talks about bail-ins. And also in the United States now they're talking about bail-ins as well for the banks. So people that do believe, like that, the deposits are insured, well, think again. Start to look at the actual numbers protecting you.
Yeah, and of course, I mean, this is kind of sketchy because, I mean, most creditors, like new creditors, when it comes to, getting involved in a corporation, they might not want to actually get involved with a corporation that in the past, took money from the creditors forcefully in order to pay off a debt that the company has. So obviously bail-in scares people away from, getting involved with a certain company. So now what does this mean for us? Because what can we, the people, do about bail-ins and bailouts in general? Like, what isn't there? Should there be public demand in this kind of thing?
Well, like, there should be no bailouts. We should have a free market economy where if you made a bad bet or if you done a stupid mistake in your business, well, you're gonna have to pay for that. Unfortunately, I believe that, and that's also what happens with bailouts and bail-ins. Actually, they said that bail-ins would be way better than bailouts because it doesn't hurt taxpayers. Problem is, every single person that gets hurt by bail-ins is taxpayers.
Well, I mean, in the end, it does lead to that because, of course, the company's production, the creditors that get involved, the depositors. I mean, this affects how the company is able to function in the future, and it could often scare business away, investments away, and it's still a forceful thing from the government on corporations that affect the people involved in the investment into that corporation. So it's unfair, and yes, like I mentioned at the beginning of this, it is a lot less unpopular than bailouts, and for good reason. But to say that it isn't bad, because it's only affecting the specific creditors, which then comes back to the taxpayers. I mean, that's one of the major points that needs to be made.
Oh yeah, totally. Like what is happening with these things? It's just banks and other corporations that gets bailouts and bail-ins. They get lazy and they stop producing things. Like today, what we're looking at is we're looking at share buybacks, which like the corporation are actually buying back their own shares and lending money to do so. And they're not producing anything of value. Like. And I said this before, we've ended up at a place where we've been before in history, like tulip bubbles. We've been there with the Mississippi bubble, and throughout history, what happens is you end up at a point where fiat currency forces you to make money with money, and being productive and inventing and being a worker does not count anymore. So that's where we're at today, and that's what we're going to see way more of.
Well, would you say that this is these are corporations on welfare?
They basically are. It's corporate welfare. It's 100%.
So it's that whole don't feed the bears scenario, right?
It's socialism for the wealthy instead of socialism for the poor.
Yeah, and most importantly, it's collectivism. And this is the exact scenario that people talk about when it comes to not feeding the bears. Is you keep feeding the bears, and they won't be able to fend for themselves anymore. So we see these corporations getting lazy, and they're just basically robbing their creditors and destroying the future of their company and their own production and their own value. I mean, this is crazy.
Yeah, well, they're forced into the system with the fiat currency, constantly creating inflation. And in their corporate structure, they're also forced to pay dividends. So now the investors are looking at higher and higher dividends, or else they're going to leave them, and then they got nothing. So what they need is to give money back to their investors. Well, they're forced in kind of a maelstrom of fiat currency and bad policies that was made back in history, and we're seeing that. And so you get the accumulation of big monopolies. That's basically what the end end thing here is. But going back to bail-ins and how important it is to understand it, bail-ins are actually going to happen. So don't just sit there and believe like, oh, that's never going to happen to my country. Go and look at the information that we're going to put up, and then you'll see for yourself what actually that this is out there. This is happening.
This is really happening, and of course the economic climate that we're living in right now is completely crazy. So we shouldn't be able to count anything out these days. Anything could really happen.
Yeah, and I also believe that we'll see it in the United States, the bastion of banking.
Yeah.
Because what is happening is their banking system is going down. Their central planners, their communist leaders, are very desperate now to make any change that they can to keep the system afloat. And you'll see bail-ins, because that's very easy for them to let somebody steal from them, right?
Yeah, of course. Well, I'm glad I talked with you about this, because this is something I guess a lot of people don't really know about it, because it's a fairly new concept to a lot of people. But it's good that we are able to talk about this and teach people about it, because it obviously does seem like it's going to be something we're going to be seeing a lot of in the near future. So thank you very much for telling us about this. And this is Josh Sigurdson signing out from World Alternative Media. Find the truth. Be the change.